Good morning, everyone. Charts are up. Let's go. So big news. Small caps join the all-time high group. Does it get any better than this? I don't. Well, yeah, it could. The transports could start performing, which they haven't yet. And so, hey, the trend has been up. There's been some erratic times, but it just continues to go up. Yesterday, 245 was the big volume strike, which capped the advance besides just the average true range, which we look at. I mean, there are bigger ranges, of course, but over the last few weeks, I mean, that was about the biggest range. That one rejected. And so a topping tail rejected. At this point, it's logical to think this is going to pull back. However, I mean, look, it's quite controlled. It's been sort of not an erratic, what we call a self-correcting uptrend. Over here, it's gotten much more uh, display of more confidence, especially currently. But as we look at the weekly chart, and it's a greater than 100% retracement, which is obviously strong. And it's not happening where this is extended from support. It doesn't mean it can't correct, which based on the weekly chart would make sense that it would to some extent. Nothing severe, you wouldn't think, right? But you could see here, this wasn't extended either. And it had, a couple of weeks of going nowhere before a dip. And I think this is what we look for in patterns like this. And the trend is up, it's strong. At some point, it's going to dip. And just based on this picture, by the dip. So that's what I would be waiting for. Now, one of the things, I mentioned in the room yesterday, it's kind of obvious, but it doesn't always work this way. I mean, where we have such extended periods where the markets have been advancing and it does it in such a way that the internals, and even after this advance, aren't even near an extreme. They're still neutral. So besides just the trend, higher highs and higher lows and not being extended, our internals not pushing up to an extreme, drags us back from, I would say the logical of the way we would think how much higher could a market go before it corrects versus our tools, in this case, the internals saying, you know what, whatever the logic is, historically, your measurement of extreme is not there yet, which leads us back to, buy the dip, and this, a dip like this, this kind of angle of retracement into support is a very positive thing versus this kind, which kind of leads you to like, man, that's kind of nasty looking. And look at the weekly chart, the size of that down bar. And I'm not suggesting, to be buying a dip like this unless you're willing to average down based on intelligently average down based on multiple time frame alignment to the upside versus in this time frame waiting for a recovery in this kind of a pattern, which of course we don't know what's going to pull back. You get left behind. So, and as I look at something like this, I see it strong. There'll be a correction at some point without, and the internal doesn't mean the internals have to reach an extreme because there was pullbacks here without them. I don't think they were an extreme, but we can scroll it back a little bit. I don't have the cursor on there. This is August, right here. Right. So here, the breadth reached an extreme, but the sentiment didn't. So that was a little bit of a heads up to look for recovery when the breadth pushed down like that. But you can see it's still neutral. So this is great that this has participated, but we'll need to see some kind of a retracement. Transports. I think this is, you say the redheaded stepchild. You got FedEx, which was down today on their earnings. Um, competition. I was reading some stuff on it. I was like, why is it doing so badly at UPS? Um, competition from Amazon and some of the others are like, how do we reduce costs? And so they're doing their best to avoid sending business over there. So things are changing. So they don't look good, but and that's probably bleeding over to the truckers and the rails and such. But um, again, as we look at the broader markets, um, we want to see participation across the board. And the more things that participate across the board, the greater the probability that these internals would reach an extreme. So this is something to continue to watch and set alerts. You don't have to watch, set alerts up here and down here. And we'll see what they do go next week. We'll see in the 65 minute, it just slops back and forth, back and forth. Okay. Um, yeah, since we're looking at, no, I didn't want that. The Dow, just slow grind, just a slow upward grind. It requires either tremendous patience or just ignoring it. Um, but it's just slowly advancing. And so it's very controlled, and that's great. So there's no, crazy volatility. It wasn't moving much. But the other thing with this kind of a pattern is it certainly gives you a very clear, defined reference point that if it violates that, something has gone terribly wrong because this is so bullish the way it's advancing in a controlled manner that if it breaks down below that. So what do? You just set an alert and assume it's going to keep going up until it doesn't. You can see the weekly chart. It's been going up for a while. Uh, the momentum has definitely slowed, smaller ranges. And maybe, this is the options expiration week. And I've showed you in the past where that's often some type of a turning point. It doesn't have to crash of anything of some magnitude like that, but is often some type of a turn as those hedges come off, and then we'll see, what transpires next week. So that still looks good. And pretty much, everything looks good. Well, not quite everything, but the transports don't. But this, another correcting kind of an uptrend, up, down, up, down, up, down. The way that's moving. Um, you know, this we talked about, I think it was last week, as it started to roll over. We'll see if this comes back. But the big one was, I'm looking for it here. Yeah, this one. Remember a couple of weeks ago, this was looked like it would not look like it was rolling over. It broke down under the pivots. And then a couple of weeks ago, here pre-market, I was like, okay, here's a pivot. We look to the left. Can it hold this area? And it did. And now that's at new all-time highs. So it just continues to be, doesn't matter how it corrects. Right? At some point, the dips get bought. But, one of the things, the weekly chart was still constructive at that time and down in support. So at some point, these things will roll over. It's just not going to be now. And even, well, this isn't doing too much in materials. This thing just whips all around, all over the place. Financials, we want to keep an eye on. Another choppy advance. And yesterday, I forget who it was in the social media stream there was saying, it's been more difficult to make the big bucks. And I pointed out, well, look at the breadth, look at these patterns. And, as things start to look great, it's just a nervous kind of a market. I've used the analogy of market. You remember a couple of weeks ago, it walks on eggshells, but it doesn't crack them. And this is the kind of price pattern that's like walking on eggshells, always nervous, but doesn't break down. And that continues. It just continues. So, yeah, I mean, as you look across the board, you can see lots of stuff like that. But here's one. Look at this that did nothing for a month, 2 months almost. And so while it got extended, and after this advance, just look at this rounding bottom. And so that looks higher. And it broke out this week. Got a correction bar. However, you got to give it lots of room, because it could have, whatever pullback percentage wise, but this could pull back, or maybe it goes sideways. That's the unknown. We look at what is, and this looks good. I mean, here, look how extended it was. And here's a great example. For those of you not familiar with some of the things that we look at and candlesticks and all that, wide range bar igniting. And this appeared here to be a wide range bar ending. So when we say ending, it's like not the end of the trend necessarily, but we look for some kind of corrective or slowing in momentum. And so it had 2 weeks of going sideways, another wide range bar, and now a couple of months of going sideways and building a significant support area. So a new advance there, and it better not go back down there. So this looks great too, and more constructive, I think, than some of the others because of the size of this base. So you can consider this, look at the stocks within here, because they're as always going to be outperformers and underperformers and catch-up trades and so on. All right. Where are the markets this morning? Well, let's go to the futures instead of that. So this is up, and the futures are going to look like that. So, down here, that reversal that occurred, that's the big support area, the bottoming tail bar. And so that's, again, what we call a correction bar. And that's the definitive line in the sand short term. You got that gap up, options expiration. Years ago, we used to expect these, significant gyrations on options expiration because there was, and they're not so significant anymore. They're more or less, intraday volatility whips back and forth. And so, when we see something that's more or less become routine, that's what we look for. And looking at this with this kind of a pattern, there's an unfilled gap down here. Yesterday, the momentum stalled. And I think if it tries to advance toward that 600 whole number, it's likely to get dragged down, back toward some medium point. So that's what I'm kind of expecting today, not to get too bullish if things advance. If it rises up toward that level and we're trading, we'd be trading the futures or a leveraged ETF intraday, take the money. But I'd use this as my reference point. And I always use the underlying as a reference point of where things might stall. And there's usually going to be large open interests or call volume at those whole numbers. So still looks good. Got a bottoming tail bar there, pre-market. And I would expect it's going to try and attack yesterday's high and possibly even get above it. And we looked at IWM, that's pushing back up again. Of course, there's going to be more buyers coming into that, whether they're Johnny come latelys or, whatever, it just keeps going up. But just like some of these other patterns, definitive lines in the sand, short term, when you have that kind of a consolidation and a whip around day like there was on the Fed day, if it breaks below that, something's wrong. Yet the trend is still up. Here's our major support, the pivot low prior to a higher high, but we got all this congestion there. So, mark off your lines in the sand and align your bias with what is. And day to day, yesterday's low is a significant support area. Spiders, same story. Support down here, it was lower. It's coming off of the low, and a little better than unchanged, I guess, give or take. Looking at the cursor on the daily chart, coming up into some resistance there. And as I'm looking at this chart and thinking, I just hope we're not just stuck between these two levels today, bored to death all day. But we'll just see how this unfolds. But you got resistance up here, you got support down there, and would just be a boring day if it just got pinned between these levels here, back and forth. SPX, take and duplicate, drag the line up to 6,600, give or take, and that's your significant line in the sand on SPX, 6,600. And so as we look at this, and I kind of doubt it's in the cards for today, but 6,700 next week if 66 is held. But as we go into next week, what we'll be talking about is this level needs to stay, prices need to stay above that on SPX. Otherwise, maybe attacking here, it is short-term extended. Again, the trend is up. Some of these things that are extended a bit, look for things that are not. So this could correct a bit and money flows into other things. Always rotation. You remember Tuesday's theme was rotation, right? Rotation out of some of these and into the Russell and maybe the transports. Well, it happened in the Russell, not so much in the transports. So again, a little short-term extended there, trend up, internals neutral, buy pullbacks. All right. And yesterday's numbers, remember I said, to me, they seemed ridiculous. But after that whip around day, maybe not so much, but look, it was just crazy how far away they were. And today, you see average ranges. I haven't updated that since the other day, but pretty much they're going to be around that. They don't change too quickly. So this gives us some guideline as to the probability of what an extreme would be as far as movements in SPX, looking at the 5 and 14-day average true range. And then you look at your strikes and say, are they beyond that? Quarterly expiration is a dividend date. I suppose so. The gap down in SPY would be related to that dividend. 65.70. Yeah, so no surprise that this is coming way up. It is interesting, I guess. That's just human nature, how such extreme biases can occur. Really talking about those option strikes yesterday as to what was the extreme. 690. And this come down a bit. All right, so they're coming a little closer to each other. And this is, so what I would, okay, when I say it's not going to happen, take it with the disclaimer, always, right? It's not going down there today, and it's not, if it does advance up there today, which the trend is up, you'd say that's a greater probability. If it advances, premium will increase, right, depending on how fast it goes, of course. And anything above 6,700 would be a no-brainer, which is not enough right now, but that's what I would be looking for. Oh, I didn't look at gold, which is marking time. It's on support, and crude oil. It's like nothing to talk about. It's just not moving. And Bitcoin is down a bit, but we've been talking about this little bottom there, and it's just a shelf. So, have your alert up here and down here. All yours, Dan.
Good morning. Yeah, I think you said it's all mine. Your voice is light again today. My laptop. So Friday, happy zero DTE day. We have a great portfolio of open things we're managing. I posted a couple of new trades today that look great. Go through alarms. Look at our railroad here. got in right here at this 1, 2, 3, 4 is a core long. And it looks, we just sold half pre-market. We have a 50% return or 55 from this entry right here. It's 1, 2, 3, 4. 55% in 1, 2, 3, 4, 5, 6, 7 days, 7 trading days. So I'm taking the stop on that. AC, we shorted a put. I have an alarm go off for some reason. Let me reset it. We shorted and I have this as a directional watch also, but as it gapped up Wednesday and started pulling in, I said, let's start off with selling it out of the money put. And we sold way out of the money 12.5s. 1680, 16, I just reset the alarms. Mindy, we've been watching. Alex, I took it off my list yesterday, so that means you put it on your list. And that's exactly what happened. Nice 180 breakout from a bottoming pattern. That looks like it could go up for a couple days. FTNT, gap breakout. I sold puts on this yesterday, but we can buy a 30-minute high now. All alarm. This is palladium. Bullish weekly, monthly, but bit of a deep retracement, as you can see on the weekly, into this bar. But that's okay. If it can take out yesterday's high, we're going to buy a half lot. AS. We shorted puts on this yesterday that expired today. So my up alarm went off. We sold at 37.50s, and I said we would roll them if necessary. SanDisk. This is a climb I'm watching. This maybe could be a 0 DTE call spread. This thing's been on an absolute tear. Let's set an alarm. SanDisk. It shows it gapping out at 96.50. Okay, so I'll set an alarm at 96. MU is another climber I've been watching for a week. I mean, now this one's bullish, but I would never do it for 7 DTE. But for 0 DTE, look, it's gapping yesterday's low. So that's a 180 reversal. Doesn't mean it can't rally, but that looks fantastic. And I got LinFedEx on my other computer, so let's put MU here for its 0 DTE. A coin alarm. I'm doing nothing. We did a put spread on that yesterday. 4 U's here over the high. I gave it as a long call option. Shop alarm just went off. I gave that as a 7 DTE put spread. Nice breakout. Bullish weekly, monthly. I consider it a directional long also, but I just want to watch the market a little more. D-Pro I posted yesterday. I posted it this morning over yesterday's high. It's gapping up. So let me just say, let me tell them D-Pro will go on pullback into gap or 5-minute high. Those look like all my alarms. Ribbon. I think that might have been yesterday's alarm. A breakout. A bear sandwich weekly. Bottoming pattern monthly. Well, look at this thing. Used to be 165 bucks. Incredible. This, I sold puts on. I have a covered call and short puts. Sam, what's that? What's my position called? Covered call and short puts. What do you call that? Let's go to earnings. Here, I'll just type it out for you. It's called a combo. It's two bullish positions. All right, FedEx. I did a short strangle. So I shorted the 245 calls and I shorted the whatever puts 175. Um, let's see. I don't like that. And I'm just bidding a nickel to get out since it's opening flat. I did the 195 puts, 265 calls. Can you believe there was juice at 265? Um, let's see, what was, so this isn't showing my cost basis, but I think I got it. It's $1.40. Oh, there it is. 6 and 6. Oh, okay, I got $1.30. Okay. Len, I shorted the 121 and 122 puts. So regardless of this gap down, I'm gonna have an open profit guaranteed. I guess so I'm just gonna wait 5 minutes, let the spreads contract, and then I'll get out of that one. This one's going against me. Shoal, I shorted the 22.5 puts. I mean, look at that, $5 away. So I shorted these for 70 cents. So I still should have a profit at the open. That's just going to be the stupid spreads that I got to deal with. All right, gas up alarm. Let me readjust that. So that's good for a put spread that expires today. WTS. Roll says VSEC on WTS. It looks like it's light volume. Look at the 15-minute chart. Yeah, it's just another breakout, but I don't like the overlapping bars. Raul VSEC. That's better to me. VSEC is better to me than WTS, particularly with this closing breakout 180. So that goes on the list. And let's set an alarm at 174. Oh, Glen is crashing more now. So now, look at Fly. My alarm just went off. This could be a home run, actually. It's a recent IPO, so you don't have a whole lot of data, but look, new low reversal here. Closing breakout, bullish 15. This could be a day trade long with the intent of, holding it if it closes well. Myrna, we did a call. We tried doing a put spread yesterday. We did not get filled, but it's my low alarm. So it's fine if we get filled. All right, Len. Okay, Len is open. It's ready. So I'm just gonna bid here. I got the 122s. I'm gonna bid 20 cents.
The Russell just took a nosedive. Some news came out. This might be options expiration, just whip arounds here. Put your seatbelt on.
All right, so I got out of my Len at a profit. Nice, Brent. Yeah, what a beautiful setup that was, man. Beautiful. I mean, That's what trading's all about, right? Having the knowledge and then waiting for your setup and just having the confidence to friggin' do it.
And I have the confidence to do it. I just don't have the patience to wait for it.
Well, I know you're kidding, but my question to you is why not? The patience is scanning.
So I want to
And
make money now.
when you see the picture, I know you're joking, of course, but I like using this Halloween example. It's like, how, all right, I'm out of my shul at $150. Look at this, Greg. I sold the 22 and a halves, and I just got filled at a dime for $150 profit.
Nice.
I'm at it. Look at Lent, how much it went against me. I'm out at a profit.
It's amazing. I mean, you use the analogy wheelhouse. That's not my wheelhouse. I don't like those kind of trades just because it's not my nature. But they are amazing how something can go so far wrong in a sense and still make money.
Hmm. Well, I mean, yeah.
I mean, if you were long, you're getting killed.
All right, I'm out of my FedEx, Sam. So I'm 3 for 3 on my option trade, so I'm done with all of those. Alarms, UA low alarm. Oh, good. This was a put. We got long puts, and then we're gonna have to roll them if we want to, of course. Or you can be assigned stop short, or you can close them. You got multiple choices. Triple U alarm triggering. I'm already in it, but it's a new trade. Look great. Well, we're buying calls. Let me show you what I gave. Let me make sure they're liquid. This is what I gave. I'll check the calls. Yep, I'm already in. $33 calls. Wait. That's wrong. That's $13 calls. Not 33, 13. And it's about 65. Man, I am so good um at guessing what premiums should be.
Russell was on support here. See if it bounced.
Yes. Oh, nice. I'm gonna do a nipple right here to get out. All low alarm. That's all right. We're not in a neg, nothing but up alarm. It's not ready.
Yeah, Delta 20 heads up. CRWV. That's buy back, pull back intraday and see if it closes this way. Maybe it puts spread down.
Which one?
CoreWeave, CRWV.
Yeah, it's great. Yeah. I've been watching it ever since this gap from this bottoming tail. Let's check 0 DTE also. $22s, 30 by 61. Crazy. Next week, at 118s. But Greg, why would you say wait on this? It's triggered. It looks great. That's something more on the 15.
I mean, as far as a swing, only because Friday options expiration, it's a bottoming pattern, which you know how much I love them. But you could do a starter position, no doubt.
All right, what about let's do put spread 113 for next week. 51. Yeah, that makes sense. Let's put it here. Slow, stabilize. Wish you had more premium for 0 to 2. BMNR. Yeah, we're still in that, doing nothing. Yeah, it's a rate tough. Yeah, it's a little double bottom after a pro gap. Well, Apple was all over the news today that they were launching their new phone today. And that's having good reception in China. Yeah, ribbon low alarm. I got short books. But yeah, that did not trigger for subscribers. QS. Oh, I shorted puts on this yesterday. I got like 18 open positions. This expires today. I got the 10 and a halves. So just gonna let it go out. Full profit. But let me set an alarm. 1170. You bang.